Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 29th of September, 2020, which is debate night. We're going to debate which stocks are good and bad. Just kidding. We're looking at the market as itself. We're going to talk about risk on, risk off assets, meaning crude and gold, and some bonds, which are still flatline. And we'll talk about this bounce. Is that it, or is there more to go? Let's start with the S&P 500. This is our ES futures. We did have the market push into the abyss, but the last couple of sessions have taken us back. And that's specifically the weekly expected move from last week and the 3200 spot. So that's where we're going to be watching. We are back above 3300, and we are back to the underside of this pullback. So Don's video, are you going to buy this rally, is a good pivot point or discussion point for today's video. So if the market can break above, I'll give you a bull perspective. The bull perspective is on the weekly chart, which just had the market pull back, rubber band, snap back, fall back to the 20-week exponential. And that, again, surprisingly enough, was this 3220 level. So that is where we are. We're still in this zone for any type of bearish pullback or bearish break under 3200. Still keeps us in this drop zone market, and that'll take us right into 3100. And that is an overlap with the 200-day simple moving average. So that's the play. There's the 4-hour chart. All right, there's the 4-hour chart. That's what the potential is on the daily chart for the market to break support, go all the way to the 200. But that's not what we're looking for, daily chart. So this is that pivot spot, pivot zone. So the market's sort of holding support, trying really hard to push up. Volume isn't going with it. So if the market will be turning down, again, debate tonight, any surprises, any big headlines, or anything else quarter in rebalancing, as we push into October, this is going to be the spot to make or break the market. That most recent bounce point was 3200 from last week's update. That support, make or break cliff zone held. And the same is true for the Nasdaq, the Dow mini futures, which did not make new all-time highs in 2020. The Nasdaq certainly did, and the S&P certainly did, but the Dow held a little bit beneath that, and the Russell did too. Take a look at crude oil. Now, crude oil is what we call or consider to be a risk-on market, meaning if the economy is doing well, people are going to travel. They're going to be using air travel, all kind of vacations, all kind of to and from work. Well, it depends on your perspective. The economy's not where it maybe should be or would have been without this coronavirus and the lockdowns. Yet here we are. So while the equity market went ahead and recovered after the corona crash, crude oil did not. It only gained about 50% from where it traded, and that was quite dramatic. If you remember, one of the near-term contracts for crude went negative into this April period, and that's behind us. So now we are into this push up. It looks like a arc or a failure pattern. So I've been discussing this bear point at 44 per barrel in crude, and the market, at least recently, has traded down from 44. That's a key spot to be referencing, and the market's already trading lower. Contrast that with the peak into August, and we had the market go down. So remember, crude is at this point weaker and more bearish than the equity market, but so is gold. And that peak in gold came a little bit earlier. That stock peak was into August. The gold peak was into July. So gold peaked first and traded lower beneath these points, beneath 2,000, and now beneath the 50-day moving average. So gold is in a similar spot to the equity market. What do I mean by that? Fell deep, broke the 50, traded toward that 200, jammed back to the upside last couple of sessions. All right, same thing. Peaked into the 2100 spot, broke the 50, and is in this no battle or the battle zone, right? No holds barred. And so that's where we are with gold. It actually is trading similarly to the equity market. The thing that isn't And our focus has been, at least on the bond market. So the bond market is looking at TLT. You can also take a look at ZN for the 10-year note and ZB for the 30-year bond. Similar logic. Now the Fed's purchasing bonds as part of their recovery or stimulus activities, so that has flatlined in part the bond market. So we would think, the assumption would be, with the equity market recovering, rallying, with the economy strengthening and bouncing back, you'd think the bond market would be going lower. To an extent, it is going lower, but it is being held or purchased or supported in part by the bond program and the bond purchases. So, and all that to say is that the market should be going lower, but it is not. If the economy is strengthening, if the stock market is rallying, particularly off of the February-March lows, right? That was the equity market crash and the recovery. You'd think the bond market would go down, but it has been held to the upside, supported to the upside. Many, many reasons for that, but that's where we are. So we don't have a lot of trades in the bond market itself. Probably a flat market, probably want to stay away from the bond market. That includes TLT. It's just a wide triangle, very, very large triangle, consolidation, compression, and you could even see it on the hourly chart. That's the bigger picture, the broader look. I mentioned the debate. So let's take a look at stocks making new 52-week highs. I like to look at these stocks only because the concept of that which is strong now tends to get stronger in the future. So if these stocks look familiar, it's because they've shown up a few times. So what I'll do is go through these just to take a look at them. In the S&P 500, just highlighting a couple that we might be familiar with. Domino's Pizza, Target, and Dollar General. The others, you might be more familiar with them than I. Just a quick look at them shows the daily chart, starting with, we can do all of them. We'll take a look at Smith AO Smith, new 52-week high. Now, Lennar Homes is a home builder that just snuck its way to the new high. And while we're discussing this, the strategy is to buy pullbacks or retracements or flag trades on the way up. And that will be to the 20 or the 50 moving average. Notice and remember the S&P is broken. So this is stronger than the S&P. All these stocks would be stronger than the S&P. Domino's Pizza, this is one of those for the moments to remember. Pandemic, let's go order pizza. Just kidding. Anyway, so the market did recover. Domino's Pizza did not suffer that poorly in, at least the stock, in the crash of the pandemic. That's March, April. And it made a new 52-week high. This is the one you're probably most familiar with. And there's a long buy trade off this 145 that is closing into 155. That's a typical little bull flag. And now that we're overextended, we have a possible sell or take profits at a minimum for a possible sell swing. That which gets overextended gets snapped right back to that 20 exponential, but Target is a strong stock, getting stronger. Dollar General, notwithstanding, Danaher, little new stock making a high, and we'll just call it PKI, PerkinElmer, PerkinElmerInc.com. Healthcare, it's a healthcare stock. So is Danaher. These are the stocks making new 52-week highs. Just the stocks in the thinkorswim platform that are making new yearly lows. It starts off with all stocks, but I put this to S&P 500. So what stocks are those? Nordstrom and Coty. We'll just take a look at these because they're the only stocks making new 52-week lows. JWN is Nordstrom. Retail name, got hit hard, and that pushed it from 40 per share, never recovered. Kept the downtrend going and just made a new 52-week low just recently. That is JWN. And the last one's Coty, which also did a similar type of move. The Corona crash was not good to retail stocks in general. And Coty is one of those. So stocks that are strong get stronger, stocks that are weak get weaker, and their strategies to join into the trend, namely on pullbacks with spreads or verticals, or just long call or put options depending on your risk tolerance. And these are names to watch as we see the debate, if you're going to watch the debate tonight. Otherwise, we'll catch the headlines and catch the futures movement after that overnight and into Wednesday's session. As always, take care and be safe. It's Corey Rosenblum with tonight's Theo update video for the 29th of September, 2020.